In this video, I will discuss a few important concepts about financial statements. Businesses require financial continual information on a range of details such as market demand, market share, pricing, competitive activity, cost of production, investment, cost of capital, and regulatory levies. One of the most important is financial information, which includes revenue, cost, capital, salaries, loans, and investments. The double entry approach, which involves recording a debit in one account and a credit in another for every amount of money transacted, is one way of collecting and keeping financial data. Either a credit balance or a debit balance will exist for each account. A tool called as the trial balance is used by accountants to make sure that the data recorded is accurately completed and stored. The trial balance will enable the accountant to gather the data needed to produce important financial statements like the income statement and the profit and loss statement. These two statements are regarded as the most significant financial statements. The balance sheet shows a company's financial situation on any particular day, usually the last day of the fiscal year. It provides an accurate financial picture of the company on the given day as represented by assets, liabilities, and equity. The profit and loss statement summarizes a company's financial situation for a certain period, usually a fiscal year, in the form of either a profit or loss for the company. A profit and loss statement is typically prepared for a quarter or even a month to assist the company in assessing its performance in relation to the objectives stated. People may make decisions about the company's financial health based on its significant financial statements and take steps to engage with it. These declarations are also among the most important documents for small firms. These reports evaluate a company's financial performance during the fiscal year in consideration. Trial balance. Any expenses incurred would be recorded as a debit in one account and a credit in another in a double entry accounting system. Similarly, any money received will be treated the same way. A trial balance will be prepared once the period has ended and all entries have been made. This is the total of all general ledger accounts. All accounts will show a credit balance or a debit balance at the end of the period, 1 year, during which the trial balance is generated depending on the number of transactions posted to each account. When the balances are displayed, it will show whether the total of all debits equal the totals of all credits. If they do not tally, a review may reveal an error that can be corrected. The trial balance will also assist in tracing any mathematical errors or incorrect entries. The trial balance will be used to generate important financial statements, more specifically the balance sheet and the profit and loss statement after the errors have been fixed so that the credits and debits are equal. Balance sheet. The balance sheet reveals a company's financial situation as of a certain day with regard to its liabilities, assets, and capital. A company's share capital, reserves, surplus, secured and unsecured loans, current liabilities, and provisions are examples of items that typically appear on the liability side of the balance sheet. For instance, a manufacturing business would require funding to purchase production-related equipment. Funds would be required to pay employees' salaries. Capital, sometimes referred to as equity, is the money that would come from the owners. Secured and unsecured loans. If capital is insufficient, businesses will borrow from lending institutions or seek investors. These borrowings could take the shape of both secured and unsecured loans. Secured loans are those that are made against a company's assets, such as debentures or bank loans. Unsecured loans are those that are made without any security. Current liabilities. Current liabilities are amounts due by the firm to suppliers, vendors, contractors, or consultants that must be paid within the fiscal year and are often paid of the company's current assets. Reserves and surplus. Reserves and surplus are profits that are retained by the company without distributing it to owners of equity. Provisions. Provisions are undetermined liabilities such as dividends, taxes, and contingencies incurred in the financial year which are provided for to be paid at a later date. Fixed assets. Fixed assets are physical assets such as land and building, equipment, furniture and fittings, and transport vehicles, cash, stocks of produced goods, and money to be received, which it uses to manufacture products or render services and earn revenue by selling the products or services. Investments in real estate, bonds, and stocks that a company plans to hold for more than a year are treated as assets on the balance sheet. Current assets are short-term assets that can be converted into cash within the financial year. This includes stocks, raw materials held, work in progress, and accounts receivable, which are generally credit sale. Profit and loss statement. Since an organization is conducted with certain goals in mind, such as profit, it is essential that its annual activities are captured in a statement known as profit and loss statement. Profits are possible when revenues exceed cost or expenses. In contrast, losses occur when expenditures or expenses exceed revenues. As a result, the profit and loss statement records the company's performance throughout the duration of the year and indicates whether the company is financially healthy or not. Revenues are typically realized sales revenue for goods sold or services supplied. Costs are divided into two categories: variable expenses and fixed expenses. Fixed expenses, on the other hand, are fixed regardless of sales volume. For example, fixed expenses include office building rent, office salary, and insurance cost. Operating expenses are subtracted from operating revenue to calculate gross profit. Overhead is subtracted from gross profit to calculate operating income. Financial data is collected and stored in an accounting system that employs a double entry method in which a transaction is recorded twice, once on the credit side and once on the debit side. A trial balance is created based on the information captured and stored, which helps to confirm the data is captured and posted accurately. Following that, a profit and loss statement and a balance sheet are prepared, which are essential financial documents used to assess a company's health. Thanks.